Old Drake, again, Northern Command, literally at our farm, Old Drake, the Old Drake Place, which is the name of our LLC, as I've mentioned. So I've talked a lot about what we look for when we look to buy a piece of property, sort of minimum yield from ag and or CRP, and can there be diversified streams of incomes coming from it. But whether you're talking about a stock in the stock market or a piece of land to buy, frankly, I find it, and most other individual investors and even professional investors, I've been in the money management business for over 4 decades. I can tell you, inside the industry, the most difficult thing to know when to do is when to actually sell a stock, when to sell a piece of land, if ever, right? Remember Warren Buffett, what's his favorite holding period? Forever. You know, why pay the capital gains and the commission? And there's things you want to hold on to forever. Sometimes it's really good row crop farmland. Sometimes it's a really good equity that you can hold on to for decades. And that's the ultimate buy and hold. But we're not going to talk about our custom rising dividend stock portfolio today. We'll talk a little bit more about that on another recording. But when would you sell any investment, whether it is a stock or whether it is a piece of farmland or an apartment building or an office building or whatever? Harder to know, right? So to help you folks, buying, selling, the best investment you can ever make, by the way, it's in yourself and in your family first, and then owning your own business and being an entrepreneur, and then buy land, young man. And then chapter 4 in our book, The 7 Tenets of Successful Investing. I'm actually going to read you an excerpt from page 39. Tenet number 5 of the 7 Tenets of Successful Investing. Use a rigorous, disciplined process when deciding to sell. I've repeatedly observed many successful families following this 5th tenet, deciding when to sell based first on the price versus the value analysis. The same analysis you do when you buy. Price is what you pay, value is what you get. The price versus value changes when an investment goes way up in value, does it not? So first, the price versus value analysis, and second, based on each individual investor's individual situation, i.e., what are your objectives, your needs for liquidity, your risk profile, your cash flow demands. The more logic you can apply to when you buy and when you sell, the less emotions get involved in your decision-making process. And emotion is the enemy when you're trying to make a decision, especially on when to sell. I'm going to say it once, I'm going to say it many times. My farmland does not love me back. Your office building, your hospital that you own with other people, Mr. Doctor, your rental property, they don't love you back. If you have bars of gold buried somewhere, they don't love you back. Your silver doesn't love you back. Your stock portfolio, your Exxon certificates, doesn't love you back. Your Bitcoin, your Ethereum, not big believers in that stuff. If you want to speculate, go for it with a little bit of money. They don't love you back. Only people can love you back. Don't fall in love with your investments. Don't let emotion take control. Be back to you soon. Thanks from Old Drake.